What's going on, guys? Welcome back to the channel. My name is Tyler, and let's get straight into this video. I don't want to waste any of your guys' valuable time. So just like the title of this video does say, when will shorts be forced to cover in AMC? I think we have a pretty clear timeline. Nobody can really predict what day it's going to happen. No, I don't think it's going to happen tomorrow, and no, I don't think it's going to take years for this short squeeze to play out. There's a lot of signs pointing to the next couple of months, but we're going to really hone in on what is going on in the overall economy, because this is a well-known fact. If you have not heard this from me, you have heard this from other YouTube videos. We need a major market correction or potentially a stock market crash to dry up the liquidity or the portfolio values of the large shorts of AMC before they would literally be forced to cover. These big guys in AMC that we need to cover to really send the MOAS home, they have billions and billions of dollars. They could buy AMC right now over and over and over again. Do you really think they'd be forced to cover if AMC was $1,000, $5,000, $10,000, $25,000? It is very unlikely. They could put billions of dollars of collateral in their short positions if the market stayed relatively the same. But if the market comes down, that's where you see their portfolio values go down. You see that collateral and that overall liquidity start to get crunched. And by this time, the big shorts, they don't want to cover. They don't want to realize these massive losses and put their funds in bad situations. But the smaller guys, once the market does come down and they don't have enough collateral to stay in their short positions, the small guys will start to cover first, leading up to the big guys. That is a well-known fact. If you have not heard this from other YouTube videos, then you probably don't watch a lot of AMC YouTube videos at all. So that is a well-known fact. We do know that. But what is going on in the overall economy that you guys need to be made aware about? Just because we have seen this little bounce with the S&P and just the overall markets, these danger signs are not gone. We are still facing an Evergrande defaulting crisis potentially coming tomorrow. Forget what you guys seen in articles. You really have to dive into these articles to really get the key points out that they are still facing a default coming tomorrow. And this could definitely rock the market, since a lot of investors have pretty much ruled this out at this point. And we're going to go over that a little bit more in just 1 second. But what I want to point out for you guys is that we are still down substantially on the S&P 500 since we did hit this high of $454. This was the peak right here. The lowest level that we did see was around $428.76. And all throughout 2021, since November and really since September, really even 2020, look, we have bounced off of this 50-day moving average all the way back here. We're talking April, May, June of 2020. So this has been about 18 months. We come under this, just a brief period right here in 2020, right here for a brief period. We bounce off of the 100-day moving average, which is this orange line. But really after November 4th of 2020, we have stayed above the 50-day moving average, only closing under this 1 day right here and then the 1 day over here. But we have still not even come close to really recovering to this 50-day moving average. And the trend has been since November of 2020. Like I said, you come down, you bounce off the 50-day, you hit a new all-time high, you come back down, just keep repeating that over and over again. That's why we've hit like 50 all-time highs in 2020. So that is what you guys need to know. We did hit this 100-day and bounce back up, but we are not out of the clear until we are approaching all-time highs on the S&P 500. And the fact that we have seen this strong rebound, I think a lot of people are forgetting the dangers that are still on the table. And to really understand the Evergrande defaulting situation, you have to understand the real estate market in China. China literally has ghost towns that they built where nobody lives in them. This is a real estate bubble at its finest. The real estate market in China accounts for about 15 to 20% of the overall GDP of China. So this is a big deal. But when we're talking about the Chinese government actually going to bail out Evergrande or not, it is very, very unlikely. Why is that? The political climate right now, they're trying to crack down on this exact thing that Evergrande is doing. That is a main reason why in America, we did not bail out Lehman Brothers, because they were so far in debt. That is kind of the same situation that is playing out in China, but they are obviously a little bit less forgiving than America is. But I thought it was just cool to show you guys all these ghost towns. There is many ghost towns where nobody lives at. Literally nobody lives in these towns. There's no businesses open. There's nobody. Why did they make these ghost towns to begin with? So right here. However, to keep all jobs from going to coastal cities, China built up its rural areas. In quotes, local governments put around the country try to juice and stimulate their economies by building more infrastructure and stimulating the property market. This was said in 2019. This is revolving around the ghost city. So they try to get people to stay, but they still flock to the coastal cities. So they basically built all these cities in between, 20 and 10 years ago that just got abandoned. And what really happens in China, since a lot of people obviously in China, they don't like the stock market, they're scared of the stock market, right? Best way to put it. They will just buy houses and not live in them. There is a housing shortage, but they're really buying apartments. About 95% of the Chinese population lives in apartments, and families will just buy apartments because they go up 10 to 15% in value every single year and never live in them. And the way this does work, when it comes down to the lending practices, are very sketchy as well. That is really why Evergrande is in a bad situation, because Evergrande, they use these pre-sales where essentially in China, you have to put up 1/3 or half of the money for the apartments up front. Evergrande would collect this money, then build these apartments, and then obviously you'd buy them, and then they would make their profit off of that, roll that into the next deal. Well, when 2020 happened, when everything shut down, supply constraints, also mix that with the fact nobody really wanted to even work in China. People were scared of the virus. That's where you see this huge problem, and Evergrande is in so much debt. But what people don't realize right now, you see these articles that says China's Evergrande says it has resolved a scheduled payment. Yes, they have many scheduled payments coming out. This is for basically local investors as well. It says Evergrande's main unit, Henga Real Estate Group, said in a statement on Wednesday it had resolved one coupon payment due on Thursday on its Shenzhen, I don't even know, traded 5.8% September 2025 bond, but it did not specify how much interest it would pay or when. Right here, this is what you guys need to know. That means uncertainty still surrounds whether Evergrande can pay an $83.5 million bond payment due on Thursday. It has another $47.5 million payment due on September 29th for March 2024 notes. So the big one that investors were paying a lot of attention to is this one right here that is tomorrow, that is not accounted for. They don't know, or we don't know. I'm sure they know if they're going to be able to pay it, but we don't know if they are going to be able to pay this. So if this news does come out that they defaulted on this $83.5 million bond payment that is due on Thursday, that could send the market spiraling. And we should know sometime tonight, since the Chinese markets, they do trade obviously while most of us are sleeping. So we should get some development on this. So this could be a very bad thing. A lot of investors are still calling this the Lehman moment for China. And obviously, China is in a very bad situation for a real estate bubble. So it's only a matter of time before this does come crashing down. And like what happened in 2008, China is the second largest economy. So you better believe that if something happens in the Chinese economy, it is going to affect our economy directly. If not directly, it's going to affect the stock market, because there is going to be fear just in investors' minds overall. But what is even more important than this is the U.S. debt potentially being defaulted on, the debt ceiling. And what you guys need to know about this, what would directly happen if we did not pass the debt ceiling or raise the debt ceiling? It says Moody's estimates nearly 6 million jobs would be lost. The unemployment rate would spike back to nearly 9%, and stock prices would plummet by 1/3, wiping out about $15 trillion in household wealth. Failure to raise the debt ceiling in time could halt payments that millions of Americans rely on, including paychecks to federal workers, Medicare benefits, military salaries, tax refunds, Social Security checks, and payments to federal contractors. And really what a lot of people are missing, yes, this did pass in the House because obviously Democrats have a majority control of the House. They can pretty much get anything passed. But like this article says right here, related article, House passes bill to avert shutdown and suspend debt limit through Senate passage is unlikely. This is a very unlikely to get through the Senate. They need 10 votes in the Senate. So they need 60 votes in the Senate to actually pass this. And it is probably not going to happen. There's a couple Republican senators said they would vote for this if they get certain other things in this $3.5 trillion stimulus package. I don't even know if you can call it a stimulus package because they aren't sending out stimulus checks, but whatever. We'll just call it a stimulus package. But overall, you're not going to see enough votes for this to actually get passed. So it is possible at the last second they do a stopgap measure to basically kick the can down the road. Nancy Pelosi has already introduced a stopgap measure that would basically suspend the debt limit until December of 2022. It doesn't look like Republicans are going for that as well. So it doesn't matter this bill got through the House. It still has to get through the Senate, and this deadline is coming very shortly. A lot of analysts estimate by about October 15th, by mid-month of October, we are going to be in a very dire situation to either get this passed or potentially default on its debt. So right there, you're looking at about a 30% decline in the markets, wipe out $15 trillion in household wealth, and lose 6 million jobs. Definitely would not be a good thing if you're invested in the markets, but it would likely be pretty short-lived. Once, obviously, they did get this debt ceiling situation figured out, the markets would probably bounce back quite strongly. But also at the same time, the Federal Reserve, and this really does play into the whole debt ceiling. If the debt ceiling don't get passed, then a lot of this will not happen. But the Federal Reserve holds interest rates steady, says tapering of bond buying coming soon. And Fed Jerome Powell, the big guy, the leader of the banks, right? The Fed with the money printer go brr, that guy. He said that specifically that they may actually start tapering next meeting. And it was very specific how he said this. It basically implied this was going to happen at the same time. He literally said this at the same time. The trading algorithm started to really drop on the overall markets. They started to bid down the S&P, the Dow, and the NASDAQ, and then it did recover after that. Once he did say it really comes down to if any bad news does come out between now and November. So I don't think it's very likely that he will actually start tapering in November, especially if this Evergrande situation does start to get worse, or that if we do default on our debt, which is the economic apocalypse, some people are calling it, that this probably won't happen. But they are going to be tapering pretty fast. So if they start in November, he said they would be done by the middle of 2022. So this would be very fast, but overall the markets are seeing this as a light spot as well, because it's basically telling investors that they're not tapering right now, that they will likely start tapering in the next 2 months. So this was a green light basically for the next 2 months to start buying stocks again. But we are not out of the clear. This announcement did not push us above this 50-day moving average, where a lot of analysts, were hoping this would push us above. As long as we are under this 50-day moving average on the daily candlestick chart on the S&P 500, we are not out of the clear. So that's really what you guys need to know. As far as the potential timeline, guys, this Evergrande situation could take a long time to play out. The debt ceiling is going to be an even bigger crisis if that does happen. We're obviously looking at the markets going down quite a lot in value, which is probably justified at this point. This growth in the S&P is unsustainable. So, I mean, 30% drop, that would probably put us back to, you know, about, what would that put us? Probably about 350, on the S&P, which would put us back to about October of 2020. So it wouldn't be all too bad in the grand scope of things. It'd be a great buying opportunity, but that is really a big danger you guys need to watch for. Like I said, I don't think they're going to actually start tapering coming in November, but this Evergrande situation, I think a lot of people are really blowing this off, and this is not something to be blowing off at this current moment. And I'm not trying to fearmonger you guys by any means necessary, just giving you guys the facts and what I see happening with the stock market and the overall economy and all these events. But like I said, my timeline still remains about 3 to 6 months. If this debt ceiling situation does happen, we are looking at the short squeeze of AMC coming even sooner, and that is a 100% fact. That is what did happen in 2008 at the bottom of the market with Volkswagen. Volkswagen started to short squeeze with the smaller shorts, and those bigger shorts didn't have enough capital to put in their short positions, so they were ultimately forced to cover. So that is the overall situation. That is what is going on. That is what you guys need to know. Drop that like on the video if you want to help push this video out to as many people as possible to get a clear breakdown of what is potentially happening when the short squeeze could happen. As well as that, consider subscribing to the channel. Also, check out the links linked down below in the description if you guys want to be notified every time a trade is bought or sold, whether it's a day trade, swing trade, or long-term investment with stock, options, and crypto. Check out the link for the buy and sell alerts. Just over the past week, we booked about $500 worth of profits. That would cover that cost for about 2.5 years if my math is correct. So we keep it very inexpensive. So basically anybody is able to financially grow their knowledge and learn a new skill with just trading in general, long-term investing, all that good stuff. If you guys do want to support the channel directly, use the 2 links to get free stock with Public and with Webull. Also, if you guys want to support the GoFundMe, get more details on Madison's journey, how that is going. She was in a really bad accident, not going to be working for at least 6 to 12 months, if ever again. You really don't know with brain trauma this severe. So that is the overall situation. That is what you guys need to know. I am going to head out of here. You guys enjoy the rest of your day, and I will see you in the next video.